Hello, traders, and welcome to the market update for the week ending 25th of June 2021. I am JG, member of Vedanta Elite Trading Team here at Master Markets. And what we're talking about today is the trading psychology. So, trading psychology, what is it? Let's start off with what is it? Well, trading psychology is when you're on the markets and you are trading, the market will move. The market will move in a direction. Sometimes it's in your favor, sometimes it's against, depending on the strategy you're using and how you are taking your trades. But whichever way you do, when you do take a trade, whichever way it goes, whether it's a winning trade or a losing trade, it affects the mind. It does affect the mind, and that's where your psychology comes into it. How does it affect your mind? How is it playing out in your mind when you take a trade? Okay, it's not possible to be a trader and not have any losing trades, and some of the losing trades can be quite big. If you haven't managed your risk correctly, then the losses can be quite big. What happens when we have big losses? It does affect us mentally. It makes us wonder how this is going to play out and what's going to happen. We start fearing the future, things that haven't happened yet. Why is it important? Okay, well, it's important because we want to place our trades on our trading platforms and be confident that they are looking to the higher probability go in our favor. So if it doesn't, then it'll affect your mind, and that can put you into a negative spiral and keep on bringing you further and further down, making you think that this trading thing is not working. However, there are many success stories, and we do know that this does work, and this is why we are in it. So what we need to do is we need to be able to manage it. So how do we manage it? Okay, so what we've got to do is definitely stay disciplined. Okay, we've got to play the long game and be disciplined in what we are doing. It's the big D. Okay, when we do take big losses, what can happen is we'll end up trading through the pain of those losses. Even though we know that markets are volatile, they're not going in a pattern or a manner that we are looking for in a higher probability, because you can never control the market. You don't know what's going to happen. So we place it on probabilities and we continue placing the trades, even though it's painful and we are taking losses. It's one thing that we could do. Or if you keep having big losses or you're having losses, then you could withdraw from trading altogether. You'll just kind of withdraw and say, I'm not doing this anymore. And it'll be a negative reaction to what is a very lucrative solution. And you can just switch off completely and say, that's it, not doing it anymore. Or you could trade with anger. You could continue trading, but you're trading out of the hurt that's caused by the losses. And therefore, what would happen is when you trade out of anger, you will lose the discipline that you have on placing your trades. So following the plan, having a strategy, and then using all the criteria, making sure it fits, make sure the chart fits your plan, and you're not making the chart fit an idea that you have or the strategy that you have, because that'll be fine. No, it has to fit. It needs to tick all the boxes before you go. Otherwise, you place trades out of anger, and therefore that anger will fog your view and not give you a clear picture of what's happening in the markets. Okay, we need to understand when we do take losses, it's going to happen. But when it does happen, we need to understand why those losses happened. And obviously, once we understand why those losses happen, that will help you become a better trader. So from all the losses that you do incur, a small price to pay to get the education for the next time when you have a similar setup to take the trade without actually taking a big loss on there. Okay, the trades can only go in 4 ways. So the four ways that trades could go: you could get a big win, or you could get a small win, or you could have a small loss, or you could have a big loss. Okay, so these are the only ways the trades can go. You know, the 4 ways that the market will play out, and your trades will work for you. However, what we could do is, if we eliminate the big losses, then we can work with the other 3. Okay, so we could sit there and say, all right, you know, I'm going to minimize my losses because I'm going to like make sure I manage my risk correctly. So you place stop losses in the correct place, and then you'll trail your stop loss according to where the market moves, and that will eliminate you taking a big loss. So you'll either have a small win, or you'll have a small loss, or ideally you'll have a big win, and that will bring your market and trading into the positive. Okay. Once we're comfortable, once we've got rid of the big losses, then we can easily get comfortable with the other 3 trading patterns that will form, okay, on our trades. So that's that. As I mentioned already, the risk management has to be placed, and always manage your risk correctly with the stop losses. So, you know, if you are in this trade here, and you saw a pattern forming here, and you decided to put a entry on there to say it's going to go to the downside, because you've got a seller bar there and you're looking for it to go further down, but however the market turns and it keeps going up and you haven't got a correct stop loss in place, then you are going to take a big hit on this. Okay, however, the other way around, if you placed your entry at the high of the bar with a confirmation there, and you got a high of the bar, and then you place a trade, you could still take a run on there, but obviously you would be managing our stop loss, trailing behind the bars as we go forward. Okay, so there you would have a big win if you maintained it. All right, so this is how, you know, the markets can pan out in your favor. Sometimes if you are taking massive losses and the markets, you know, your strategies are not fitting, then take a break. It's not difficult. Sometimes it's just probably a better thing for you to take a break, you know, gather your thoughts. Break spelled as in break with a car. Take a break, hit the brakes, stamp on them, stop the trading, you know, maybe go into a demo account, place trades on a demo account, see how the markets are panning out, save your capital until the markets settle a little bit, and then you can see that, okay, things are calmed down and now I can start placing my trades again because, you know, my demo account's doing better than what it was. And now you can start making an entry back into the market with maybe a smaller account size and placing smaller position sizes on the trades, and then increase them gradually as and when you feel comfortable. What we need to do also is we need to enjoy the outcome. Okay, so when we place the trades, whether it's a winning trade or a losing trade, just enjoy the trading. Okay, it's about being in the game itself. Place your trades, learn from your losing trades, you know, profit from your winning trades, but also make sure you remember them so that you understand what you did the last time, and you know, you can repeat that pattern and maybe even build a stronger strategy from what you have learned. So that's the trading psychology. Okay, as I said, what is it? Is how our mind understands what's happened in the markets and on our trades. Why is it important? Okay, because if the mind is not settled, then it can get us into a downward spiral, and that would keep us in a very low place, which is not going to be beneficial for when it comes to placing trades with discipline. Okay, we need to enjoy what we are doing. Okay, so losing trades, we learn from them. So how do we manage the psychology? Okay, when you place your trades, there's only four ways that can go. Get rid of the big losses and manage the other three, so you can get comfortable, and that will give you a better understanding and keep you in a good frame of mind. Okay, if necessary, then take a break from trading. There's nothing wrong with having a holiday. Just go away, leave it alone, put it to the side, let it settle, and then come back to it with a fresh set of strategies and fresh ideas, a clearer head, and then start trading again, starting in small increments to begin with, and then we can just increase the size and go back to your normal trading pattern. Okay, and that's trading psychology. Let's move on to the markets and see what's forming in the markets for us currently. So towards the end of last week, there was a big drop here, as you can see on the euro dollar. So most of the currency pairs had a similar pattern forming, either an increase or a decrease, and it was a large drop or a rise, as you can see. And then now the market is going to start trying to correct itself. So as you can see, we've got a swing low confirmed already on the euro dollar, and the market is coming up to the upside. I suspect there's a lot more open equity left here to the upside on here, but is it going to go immediately to the upside, or are we going to get a little bit more consolidation before it goes? Because double insider bars forming at the moment, as you can see. So yeah, I believe there's more for the upside on the euro dollar. Dollar Swiss, again, in this case, you can see it's gone to the upside. More or less a similar pattern to the euro dollar, but in a reverse order. So there you are, we've got more movement coming to the downside, where it's going to come back and correct itself. So it's back in line with this range of bars there, and then we'll see which way the market performs from there. Pound dollar, more equity, open equity left to the upside. Is more strength going to the upside after this massive drop. So hopefully we should see some more movement to the upside, even though we placed a cash in trade on the confirmation bar here, but it didn't go in our favor, as you can see. So that's the markets for you. We can't always predict them to be going in the direction that we want them to, for no reason whatsoever. 3 seller bars, clean move to the upside, and then all of a sudden it comes to the downside once we've got a confirmation. That's how the markets work, and this is what we need to make sure that when we see things like this and we place our trade according to our strategy with confidence, and the market turns for no apparent reason, we understand that it happens, and we can handle this and manage this without getting too rattled or letting it disturb our chi or our mindset or our focus. Dollar yen still more movement to the upside than we are on here. A couple of seller bars forming there, but there is still some move left. However, with the open equity, looks like it's coming to an end. We won't be taking any more trades on this to the upside. We'll probably wait for a turn to confirm and then see if there's any opportunities to take to the downside on here. Aussie dollar, strong move to the upside here. We did have a trade on here and it's already closed out, but there you are, with a profit on the Aussie dollar. It's still looking at more move to the upside there. Euro yen, another one which we have a trade on at the moment. Double insider bar forming. I do believe there's more move available to the upside on this, so we're waiting for this to keep on going and hopefully get to a profitable trade out of the Euro JPY. FTSE, like everything else, there was a drop, but now it's recovering again and a bit more move to the upside. It's just confirmed a swing low here, so plenty of open equity left on the FTSE. On the Dow Jones, similar pattern, as you can see, as the FTSE, they follow very, very similarly. And on the Dow as well, more move available to the upside. Believe this will be carrying on for a bit longer. Coffee, a swing low confirmed yesterday on there, and looks like there's more move available to the upside. It had a good run from like March onwards, as the lockdown was starting to release a little bit, it's taken a good run to the upside. Slight correction there, and now we're back again. So we are looking at some more moves to the upside on the coffee. Brent USD, good run. However, the open equity is diminished on here, I believe now, so it wouldn't be pertinent to take a trade to the upside anymore. We'll wait for a correction and then look for opportunities to the downside on here because of the number of bars. You can see there's quite a bit of open equity. So from there to the confirmation, there's 26 days, 26-day run on there. And before that, as you can see, there's been shorter runs before swings. So plenty of open equity has been diminished on the Brent USD, waiting for an opportunity to the downside. And same again on the gold. Gold took a big drop there after the swing high. Now it's settled a little bit. It should be looking to make a little bit of a climb to get back to a certain range, but something we'll keep an eye on inside a bar forming. So a bit of indecision in the market for gold at the moment. Bitcoin, I haven't spoken to for a while, so therefore, as you can see, I was quite it was quite pleasing to see a Bitcoin running all the way to a high there. And since then, obviously, there's been some news in the market, and it's brought it back to a manageable level. And here we are back into a bit more of a pattern of where it might settle. But however, crypto being quite volatile, we don't know where it's going to settle. We've got a swing high waiting for a swing low to form before we can maybe look at opportunities on there. But yeah, maybe a little bit more move to the upside before we get anything further on here. And that's the markets for you. And so let's have a look at the performance for what we've had in the market this week. And with that, I'll tell you that in the Elite Room market update for 25th of June 21, in the Elite Room, for the primary runners, 20%, we had no trades. On the cash in 4.0, 20% no trades. Cash in 4.0, 100 pips, there were no trades, so it's all zeros are there. Continuation pattern, quick exits, there was no trades on there. On the slow exits, though, we did have a trade and we made a 0.05% profit on half the trade that we had on there, and the other half is still running. So we're waiting for that to close when it does. But at the moment, we're up by 0.05% on the Elite Room as a total. The live trading room, on the lift off 20% OE, there was no trades. On the 70%, there were no trades. So it's 0%. On the cash in 4.0 TSL primary, there were no trades. So it's 0% there as well. However, on the cash in 4.0 70% OE, which is also the 1 day exit strategy, we had a trade and we took a minus 0.96% loss on there. So the total for the live trading room would be a total of minus 0.96%. So the both rooms combined, Elite Room at a plus 0.05% profit and the live trading room at a minus 0.96% loss. We have a total for both rooms at minus 0.91% this week. And that concludes the market update for this week. And as I said, keeping your trading psychology in mind. Until the next time, stay disciplined, follow the plan, and keep trading like a master.